7th floor.
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Space. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the Rollup.
The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
Welcome to the nest. See you on the show.
Sir. Welcome back to the Tokenization Tower. Happy Friday, guys. It's been an epic week here in New York City. The institutional mania is on. Don't believe what you read on Twitter. Markets are very green today amidst all of the global instability, political nonsense, private credit cracks. We're looking good here. Bitcoin finally catching a bid, finally kind of staying put in the midst of bad news and just general market uncertainty. Guys, it's Friday. We're live. We're at the Nest. Shout out to Plume. Big Plume stands. We're live at Tokenization Tower, the Nest, presented by our friends at Plume. Guys, we have a great show today. We have tons of news to cover. From yesterday, we had some pretty great clips come out from Chainlink, Polygon, Across News. We had the Agentic Finance show. We had the WorldCoin guy come on with an orb. That was trippy. And yeah, today we got the 21Shares head of research, and we've got markets, we got news. Let's get into today's topics powered by our friends at Trezor. Let's get into it today. Today's topics, guys, we've got the Nest day 4, markets weather per usual. The weather's been absolutely bipolar here in New York. It's been interesting. Today I had a full ski jacket on. 2 days ago it was 75 and this room was 88 degrees. Then we've got a little bit of touching into the timeline reactions, news, what's happening there. Then we'll flow into 21Shares, head of research, really just to talk about what's happening in the ETF landscape, in the digital asset investment space, asset managers, allocators, etc. Which, by the way, guys, DAS is coming up in New York the week of the 23rd to the 26th. We're hosting an event here in the Empire State Building live on Wednesday night, the 25th, from 7 to 10. It's on the DAS official Luma. So if you guys check that out, come through. We have a ton of signups already, and we might be doing a special live stream there. And then we have a special guest. We got our first intern producer panel shot. We're going to have Etan join us later at the end of the show. Today, we're going to have to show some love for our boy. He's going to, hopefully have us a run through of the trenches, pulse of the market, what's happening outside of the kind of broader, bigger picture news that we usually cover. So guys, that's what we're going to cover on the show today. We're going to keep it rolling. We're going to have fun. It's Friday, and let's have at it, guys. All right, guys. As I said, it's been a bipolar week here in New York. I mean, Tokenization Tower has been hot. It's been cold. As of now, we're looking pretty warm. It's a sunny day, not as cloudy as it's been. Shout out to Relay, powering cross-chain swaps across the digital asset ecosystem, bringing you guys live here, powering our weather segment, and just bringing the best of all assets on any chain, anywhere, probably soon to be powered by AI agents. That's the weather today. That's what we're doing here in New York. It's slotted to be a beautiful weekend, slightly cold. It's time to touch some grass, guys. Let's move into the markets. Markets today are green. Bitcoin's leading, tapped above 73. I believe we're just back under now. And yeah, really, really excited to have Bitcoin once again just kind of staying strong amidst stocks pulling back, the dollar is surging. I think the DXY pushed above 100. So yeah, there's threats around the Strait of Hormuz raising fears of a major supply disruption. I actually saw a tweet that was saying that a lot of the war stuff is actually a cover-up for what's happening in some of the private credit cracks in that market. We'll see where that really kind of comes to fruition, if that's really hiding something. Energy markets are potentially facing an 8 million barrels per day supply disruption of oil, prompting the IEA to release about 400 million barrels from their oil reserves. Stocks are green today. NASDAQ's green. S&P is green. And yeah, I mean, again, volatility is definitely in the markets, but people don't seem to be that spooked. We had Frank on from GSR. He was talking to us about how all of the institutions are kind of holding off on actually buying more equities and buying more assets, but retail keeps buying. And ironically, they keep buying and they keep losing money, but they keep buying. Interesting enough, something to watch on the equity side. As you guys know, I've been pushing a uranium and copper thesis, part of this Marin Katusa Rise of America book that I read 5 years ago. In that book, he talked about rare earths, precious metals like gold and silver, which I actually was fortunate enough to buy, I think 4 years ago. That's well, I did not get my hands on the copper and uranium, position that I wanted back then. So I did kind of have to FOMO in a bit, still holding those strong in the equity side. And then also not financial advice on Per, the hyperliquid DAT, the one and only one that is actually above ground on the MNAV and on the actual, the price that they purchased at versus where the actual asset is at today. All right, guys, we're gonna get into the news. Before we get into the news, let me quickly tell you about one of our best partners here at the Rollup. We're gonna get into all the news. Near is the blockchain designed for AI native applications and autonomous agents. Go to near.ai to learn more about what Near is doing in the AI sector. Guys, moving on into the headlines. We've got GSR. Our boy Frank was in the office. Let's give Frank some love, man. Came in here, fired up yesterday. He didn't tell us about this. He must have not known that Zama's been a long time partner and supporter of the show. They completed the first confidential OTC trade on Ethereum. You might be thinking, what does a confidential OTC trade even mean? Considering that all OTC trades technically don't happen in a DEX or in an exchange. They happen with two parties kind of just sending assets to one another, either through an escrow or through some sort of service. So why don't we get into it a bit? If we scroll down here, we can get some of the details. Basically, today, GSR, this was yesterday, they announced the successful execution of the first confidential over-the-counter trade using Zama. Zama essentially issues trades and stakes assets confidentially on public blockchains in a quantum secure and compliant way. And yeah, the head of OTC trading at GSR said that confidential settlement infrastructure addresses one of the largest pain points for institutions trading digital assets. And I think he's right. I think that, this is something that we talked about on the show this week. The missing part of digital asset trading and infrastructure for this institutional flow is on the privacy side. And so really cool to see this. And basically, this transaction is the beginning of the underscoring of the growing institutional demand for privacy-preserving tools in digital asset markets, and signals this broad kind of shift in momentum towards more adoption of confidential settlement standards. Guys, this is a no-brainer. This is something that's going to just continue to happen, and we expect this to accelerate. Aztec, a privacy blockchain, Zama, privacy tools, Near is doing things with ZK and privacy for AI agents. Obviously, we had Eric Voorhees on at NearCon, and he talked a lot about that. So guys, I mean, look, privacy is going to accelerate as a result of the more positive regulatory clarity that we've had with regards into the post-Tornado Cash, kind of post-on-chain mixing era. There's still some things that need to be worked out, kinks and that sort. But yeah, I mean, looking at trying to get privacy implemented more and more into this space and into this market. So big congrats to GSR and Zama, guys. Let's go, man. You guys are crushing it. So good work, guys. All right, let's move on here. This is kind of the talk of the market right now. Very, very unfortunate. I actually had a Fortune reporter reach out to me, ask me for a comment on this specific topic. So if you haven't heard, Token2049 Dubai has been postponed. The event has been moved from April 2026 to April 21st and 22nd of 2027. I mean, if you guys have been seeing the drone videos of the absolute just pure sadness of these attacks on residential buildings in Dubai, you'll really get a sense of why people are fleeing this area. I actually put out a really viral tweet several weeks back about how there's this kind of weird culty-like environment in Dubai where there's a lot of almost propaganda coming from the inhabitants about the whole area and the space. And then now we've came to see more and more about how there's actually rules and laws against public defamation, if you will, of Dubai, of people leaving. And so really unfortunate situation. The escalating Middle East geopolitical tensions are impacting safety and logistics, obviously. And so existing tickets will roll over to the 2027 Dubai event, assuming that, that everything de-escalates by then. Also, you can transfer your tickets to Token2049 Singapore. We will be there in Singapore. It's one of my favorite events of the year. They should have sent you an email about it. If you're a speaker, you got an email to also switch over into the Token2049 Singapore. And yeah, I mean, I think from the community perspective, you got to support this, right? Like, you got to support safety first, community first. I think all of us are probably disappointed. I honestly, my heart goes out to Alex and the Token team. I know that this is a massive revenue source for their business. And look, I mean, outside of just Dubai, we talked about this with Frank on the show yesterday, where there's this conference spectrum, right? Of like Dev Connect, ETH Denver, all the way to like Money 2020 in Vegas, FinTech. In the middle, you've got things like Salt, like Cybos, Token, Consensus, Miami this year, which I think is probably the most slept on conference. Miami has not had a banger conference since I think 2021 Bitcoin conference. And so I think that's going to kind of be a good one. But that spectrum there, I think there's kind of a bit of a shift from the, let's say, more developer inner echo chamber-esque events. So some of these kind of like very Dev Connect, DevCon, very like crypto oriented things, to now more kind of in the middle of the spectrum where it's like institutionally oriented. I think DAS fits in this. They've just raised their ticket prices. Apparently they're having a ton of demand from the institutional side who are used to actually paying for tickets, right? That's another thing about conferences in crypto. Nobody wants to pay for the tickets for the main event because there's always so many side events. And so this kind of creates this weird dynamic where you're not actually able to charge that great of prices to kind of like crypto native folks. However, folks in the more institutional banking, fintech, legacy finance, general finance area, they are more used to paying for tickets. And so there's kind of this shift happening. Our prediction as part of that regime shift episode is that we would expect this kind of like more techie, kind of era of conference to shift, or at least like kind of like bifurcate into more institutional finance events, and then actual kind of like hackathons, dev events. So again, guys, I mean, Token brings 15 to 25,000 crypto professionals into one area in Dubai. It's the biggest conference of the industry. My heart goes out to the team and to everybody in Dubai. I hope you guys are staying safe. Glad that we got to talk about this. And again, heart goes out to the Token team. Let's keep it rolling here. All right, guys, we got Chainlink. Ryan Lovell is describing blockchains as factories, data as oil, and Chainlink as the pipes delivering real world data. We talked about this yesterday, guys. Don't need to go too deep into it. I think obviously Chainlink is facilitating trillions of dollars in transaction volume across its network of products, and they're crushing on the institutional adoption side. So I see this as a growing part of the entire Chainlink ecosystem and the crypto ecosystem at large. And yeah, if it's possible to just go ahead and play that video, I think it's going to be pretty helpful for the audience to get a quick understanding here.
Reliable, compliant way. We're the pipes that carry that oil. If you think of blockchains as factories and data as oil, you need to get the oil to the factory in a highly secure, reliable, compliant way. We're the pipes that carry that oil. If you think of blockchains as factories and data as oil, you need to get the oil to the factory in a highly secure, reliable, compliant way. We're the pipes that carry that oil. If you think of blockchains as factories and data as oil, you need to get the oil to the factory.
So I wanted just to cover that. Just an interesting mental model to bring kind of like new ideas to how you guys are thinking about these assets. Let's go ahead and move on. I think this next one is pretty interesting from Ethan, I believe. Let's go ahead and pull it up here. And again, shout out to Chainlink. That Robinhood clip did quite well yesterday. They were fired about that. Their community always gets super fired up. Yeah. So up next, guys, we've got a little bit of market commentary from a former Goldman Sachs MD, who traded natural gas for 12 years, who thinks systemic trading models can have fatal flaws when applied to commodities trading. I mean, I imagine how could it could apply to crypto trading 24/7, way more volatile. So I just want to play this clip so you guys get an understanding of how kind of people are thinking about this idea of let me spin up an open claw, set a trading strategy, and make a ton of money. Not sure it's going to be that easy. We scroll down. This is a really, really good clip, and I think we should play for you guys. Basically, every quant who thinks they've solved regime detection needs the answer to this.
Discretionary trading can be fully automated. Do you think that that's doable, or do you think there's some non-linearity, so to speak, with the human mind and thought processes?
Wow. Great question. One of the aspects of a lot of these either AI or algorithmic trading models is they just look at the history of, well, they pull in a lot of data, but for example, think about the gold market. Like if you had this strategy running in 2015 or something like that, there would not be a possibility of the gold market trading 4,000. But from a discretionary perspective, for kind of the real long buy and hold type people, to have that view that, hey, this is a commodity that's going to go to an entirely different pricing regime. And actually, what you've seen in kind of the last 8 weeks or so with just, prices going vertical, that is not found in the history of the gold market anywhere. And you would probably have been fading the market in week 2 or week 3 saying, wow, this thing is extremely overbought. It can't go up like this. It doesn't go up like this. But not only did it, it carried on for another, 5 weeks, and, we'll see what happens this week, but I think it's going green again. So, I think humans matter. I've had a decent sized silver position on, actually, which is, kind of like gold on steroids. And silver broke through $50. It traded there when the Hunt brothers were cornering the market. It traded there again in 2011. And it got up to this, $50 level, this, psychological level. Hey, it can't get through there. And then it went through. Now it ended up retracing on Friday. But that's a market that I think can trade over $100 within the next 6 months, and potentially as much as $200 if gold continues going up the not necessarily the way it is, but if it continues its bull run. So, but that there's very few trading models that are going to say that, other than kind of trend following models. But those, I'm guessing that's not quite what you're thinking about. You're thinking, okay, hey, the black box AI models taking in all the various data points. It's hard because also, like, the markets change, and the market structure in natural gas kind of seems like it changes every 3 to 5 years. And so if you've got pricing data from 8 years ago, that is,
these guys are
going
crazy.
to generate a bad signal today. You'd rather not have that data because it's in an entirely different supply demand regime. And but when you take a step back and say, okay, hey, I've been a gas trader for the better part of 20 years, and so I've seen when it's high, I've seen when it's low, I've seen it do crazy things, and a lot of the models just don't sort of include all of that context.
Wow. So basically, like, what I gather from this is that if you are trying to just apply a strategy to a broad market like commodities, like gold, you're just not going to like the back testing of all these algorithmic strategies, from my experience and any seeing people do this or kind of like watching it, all I get is like very strong results in back tests. And then when you put it in the real market with real money, it doesn't usually work as well. And I mean, there's a lot more to it than just that in this clip, but yeah, these guys are on a different level. So, all right, guys, let's keep it going here. We're going to move on from the oil and commodities market into the developer activity drop off. I think this is because of AI. I think there was a massive exodus and brain drain from crypto into AI. So we saw weekly open source crypto commits down 75% from 850K to 210K. That was something that, I mean, is probably in line with the market, as well as maybe just a part of the broader shift that we're seeing in the focus point of developers, right? Like, I literally just saw a video on Instagram yesterday of an old friend who used to work on a project with actually Robbie, and he's put out this video, and he was like, basically, I'm exiting my crypto company. I'm putting all my attention and focus on coding into AI and ML. And so I think AI talent migration here is a huge part. If you scroll down, you can actually see the chart and just see the declining amount of developer activity in the space. Lower token prices reduces builder incentives. There was a lot of this kind of like bloat from grants that was happening as well for developers. I think that's changed now, and there's also more of like a verticalization of chains, right? So in the beginning of blockchain development, from the chain ecosystem perspective, everyone was thinking about it like, okay, I'm going to build the blockchain like the L1 or the L2. Then I'm going to go find people to build applications on my chain. Like, I'm going to go and find people that are going to build the next DEX and the lending market and all of that. But the reality is, the more kind of successful models have been verticalized. So the team that built the chain is going to build the DEX or the leading product. And actually, one of our portcos on our fund, just unsolicited shill here, Rise, what they've done is they've built Rise as GigaGas L2, and then they've basically gone and built a enshrined perp stacks into the actual chain itself. And so the same dev team that's building the chain is also trying to build the flagship app. And so I think there's also a shift in the way that development is happening in the space, in terms of let's just give out grants to build these kind of ecosystems without a focus and this kind of neutrality. There was this huge look, we're a neutral platform. We are arms open to anyone coming to build. There was less preference and less preferential treatment and less kind of hierarchical bets on teams. Now, obviously, grants were giving in various capacities based on the teams or the developers' ability to execute and build something solid. But the idea was open arms, anyone can come build, and you guys will get this equal kind of treatment and support. Base went through this and struggled with a lot of their builders. Other chains did. And so I think part of this, sure, it is AI. It is this actual shift in brain drain and shift in grants. But I think a lot of it is actually chain teams thinking about verticalization as a strategy and as a business strategy, and then actually giving preferential treatment to certain teams and taking bets on these teams from that perspective. So if you're a crypto bull, you don't love to see this, but this is cyclical, guys. Like everything, if you look at the venture investing charts, if you look at the prices of the assets, if you look at the dev activity, they're often pretty aligned. And so I think that, for me, I'm not too worried about this, but I think that the second and third order thinking here is more about the bigger shift in grants and verticalization as a strategy, as a result of this kind of removal of governance and DAO structures and more kind of top-down decision-making and speed and execution. All right, guys, let's move on to probably the last thing that we'll cover today before we get Eli from 21Shares, their head of research. The EF put out an EF mandate outlining the organization's guiding principles, the core values: censorship, resistance, open source code, privacy, and security. Again, I said earlier this week that I'm very excited that Ethereum is actually pushing this forward still. A lot of this regime shift evolution that we're talking about is kind of suffering from the losing of the core ethos. You're kind of losing the core ethos by doing some of this. again, I don't think everybody is, but I think Ethereum is staying firm on this side of the spectrum, saying like, we are not giving up on any of this. Where I think a lot of other blockchains, DAOs, teams are kind of moving all the way to like a company structure with, officers, shareholders, etc. And so Ethereum just wants to continue to focus on user self-sovereignty and resilient coordination. That's something that their entire network is built upon. And yeah, the EF wants to operate as a nonprofit steward, and they want to concentrate on high leverage work. It's very similar to what we just talked about why dev activity is slowing. I think in a similar vein, Ethereum is also making more preferential, concentrated bets on initiatives within the roadmap rather than just kind of trying to have 25 to 30 work line items out at once and just kind of do whatever they feel is right. And so, look, I'm bullish. I think that this is super important in the age of AI. You want to commit to subtraction for resilience, gradually reducing EF's direct influence over the ecosystem. So I think if you guys keep scrolling down, you can see a couple more of the key points here on the thread. And yeah, again, Ethereum is framed as the world computer, supporting long-term human freedom. Vitalik obviously has this very, very unique perspective on the world and on the future of the world, and especially given into the kind of agentic world now as well. So this was released today. Early reactions are still kind of coming about, and we're yet to kind of see how the community reacts. But I think all of these, my general take is that all of these initiatives from the EF have been rolling the ball in the right direction. And now we are at a point where that's just going to continue to compound in the right way. And so, look, if you're an Ethereum builder, if you're an investor, you got to be excited and bullish on seeing these initiatives go through. Yet to be seen how quick these can be implemented and really like at the scale, but time will tell. That's the Ethereum Foundation mandate. All right, guys, moving on. I think we'll have our first guest, Eli, the head of research at 21Shares, get ready to come up here shortly. Until then, one more thing here from Blockworks data is actually the hyperliquid trade.xyz growth. So we talked about this on the regime shift, and basically the hyperliquid based perps market for non-crypto assets has been absolutely flying. We will continue to see this do well as we get a rise in the desire to trade tokenized commodities 24/7. And so, yeah, the OI increased 446% since January of 2026. The platform now holds 41% of total decentralized perps market OI. As you can see in this chart, it's absolutely up only to the right. And yeah, I mean, guys, this is the 24/7 trading of RWAs, oil, equity indices. And look, this is HIP3. This is the big thing that HIP3 enables. And you just got to be excited about. Trade XYZ is doing more volume on their own platform through Hyperliquid than some of the entire perp stexes themselves. I mean, come on. This is something that you got to be excited about and you got to want to root for as part of the crypto ecosystem and just general kind of space at large. So, yeah, guys, I think that wraps up our news segment of the day. Up next, we've got our friend Eliézer. He is the head of research at 21Shares. 21Shares is a very unique company operating at the kind of like at the fringe between traditional finance and DeFi. And I'm sure Eli will have a ton of different kind of like commentary about regulation, about what's happening in the institutional space and more. And so happy to have him on and get into that. Also the ETF landscape, obviously being a big ETF issuer as well. And so we're live, guys. We're going to have Eli come up and he's going to talk crypto markets, policy, and more. So we're going to get him up here and we're going to get this party started. Our one and only guest of the day, Robbie's still down in South Florida. He is getting ready for the big DC trip next week. And we will be live from DC Tuesday, Wednesday next week at the DC Blockchain Summit. If you guys are there, come say hi. If not, we will be live from the actual main venue talking about clarity, what's happening in the market structure bill, what this is looking like, getting a picture from the Dems, from the Republicans about what's happening at the landscape at large. And so, guys, looking forward to that. I think we have our guest, Eli from 21Shares, ready to come in. We're going to get him up. We're going to get this show started. Looking forward to this one. Eli, welcome to the show, man.
Thank you for having me, Andy. This is great to be here.
Good to see you, man. Good morning. Happy Friday. How was your week?
Happy Friday. It's been hectic, 24/7, like the crypto market. It's been good.
Yeah, man. So I would love to learn about kind of what your week looks like. What is the head of research at 21Shares do? Are you working with Claude and doing Perplexity financial modeling? Are you doing calls, talking to teams? What's your role and how'd you get here?
Sure. Thank you for having me first. And we at 21Shares, we run about $8 billion in clients' assets across the world for crypto ETFs like Bitcoin, Ethereum, Solana, what have you. We've done that for the last 8 years. I've been in crypto for the last 11 years, first as a VC and, of course, now as the founding team member of 21Shares and global head of research. And our role is to make sure that we understand the client journey, right? We're talking about some of the larger checks in the asset management space, from private banks to family offices to even pension funds, and even fast forward to insurance companies. So our focus is on really client education and understanding of their journey, where they are right now, to better understand this asset class. And they have a ton of questions, right? They're asking about the role of Bitcoin in a diversified portfolio, Bitcoin as a macro asset in these heightened geopolitical conflicts. Most importantly, also, how do we value Bitcoin? Does Bitcoin have intrinsic value? What would be the method for that, right? Is Bitcoin similar to Ethereum and Solana and the others? Because there is thousands of cryptocurrencies around the world. So our job is really to take these investors from 0 to 1, starting with first principles, giving them research in a cadence that they are used to, whether it's weekly, monthly, quarterly, so that they can really get into this asset class, starting with education.
Yeah. Yeah, man. I mean, once you become this kind of like neutral education, credible source for them, they then want to, use 21Shares for ETFs. They want to, leverage your social capital, your network, et cetera. And so I'm curious what that process kind of looks like, right? Like when you're working with these teams, it's probably on the digital assets team side or something in that realm. Like, what is your kind of like research and education process actually unfold to look like on a weekly and monthly basis? Is this like seminars? Is it calls? And like, what have been like the more important and interesting topics that you've been able to like really get through to these, clients and customers of 21Shares?
It's a great question. And, Andy, for the last 8 years, most of the questions have not really changed. And actually, the first question that the investors ask is whether cryptocurrencies are actually currencies. And the answer is some of them no, right? Some of them are actually hard assets like gold, such as Bitcoin, while others are building app stores like the iPhone and Samsung so that we can have financial services built on top and over consumer applications. So the research process really starts with these first principles and basic questions that the investors have for one-on-one series, whether it's written content, right, or even like conference calls, so that we can really guide them through. And then the second piece is about, of course, the news cycle and geopolitical conflict, especially in this environment right now. They're really trying to understand the role of Bitcoin in a diversified portfolio when they compare it with gold and silver and oil, and of course, other assets as well. So our job is to really make sure that they grasp the news cycle, they actually get rid of the noise so that they can really focus on the signal. That's step two. And step three is to really look at, of course, the long tail assets, but also making sure that the cryptocurrency space, which is very much in its infancy, has standardized analytics and information so that the investors can also understand cryptocurrencies, like, for example, any publicly listed company earnings reports. We do also like the equivalent of earnings reports with blockchain analytics, because the beauty of blockchain technology is transparency. So we can make sense of the underlying data so that we can actually form signals for the investors, and they can actually then understand Bitcoin, Ethereum, Solana, and others from a fundamental perspective when you're looking at revenue, cash flows, user growth, etc. Right? So it's a, I would say, multi-layered research process, but our job again is to always take the client angle and who they are in their journey and what type of client they are as well, because a private bank and a hedge fund basically have a different, I would say, language to speak to. But this is what we do, really client-centric, and then providing education on the back of that.
Yeah, yeah, beautiful. You know, we are all waiting for Clarity Act to pass and the market structure bill. I'm curious, is there a lot of kind of hesitation and like, restrictive thinking around the state of the regulatory regime in digital assets today? Like, are we seeing kind of this hesitation, this like, oh, we're just going to wait until there's a bit more clarity, no pun intended, on the market structure bill, on getting this through? Or is it just like full guns blazing, like we want to do a POC for a product, a blockchain, stable coins, et cetera? Like, what is the institutional appetite as it pertains to the regulatory environment now?
In my experience so far, I've never been more excited to see the institutional engagements that we've seen for the last at least couple of years since the launch of the world's first Bitcoin ETF in the US. And the reason is because, and as you can see with the data, this has been the best ETF launch ever since 1993, which shows again the pent-up demand for this asset class, specifically for Bitcoin, and then also for the long-tail assets that were able to be launched afterwards. So when it comes down to the regulatory clarity that we're gaining right now, from the Genius Act to then eventually the Clarity Act, and also in other places like in Europe with MiCA, to be honest with you, when you think about the phase in which we are right now in crypto, we're in a phase where we finally get regulatory clarity. Investors are able to invest in this asset class using their banks and brokerage accounts the same way they were investing in NVIDIA or the S&P 500 or any other publicly listed companies. So the regulatory clarity is pending, which is great. And to me, now we have all the infrastructure ready for investors to then, once they have the ETFs, being able to use the technology in a way that is sensible. And that's why you see beyond POCs, like real world assets being listed and traded on multiple venues, whether it's one of the largest derivative marketplaces like Hyperliquid, where we've seen billions of dollars of volume for oil and silver, as well as gold, but even also digital assets. And I think it shows again, Andy, that the world right now is beyond just thinking about crypto as a speculative asset class, and an asset class that does not have regulatory harmony, but now actually moving beyond that and understanding that missing out is actually the mistake, rather than questioning the existence of this asset class itself. So for me, as an OG in this asset class, I'm more excited about the future than ever, because definitely we have the infrastructure ready for institutional adoption, whether it's at the corporate level, at the institutional level, or of course using the technology itself, the same way we've seen in the past, the early 2000s leveraging the internet protocols to build online businesses. So that's really the beauty of the phase in which we are right now. So to the investor's point of view, some of them are early in their journey, so they want to wait and see, and that's normal. They want to have more information, while others are already deep in their toes, one or two, but really trying to delve more deep into using the technologies and, of course, investing in the asset class itself.
Yeah. Yeah. I mean, speaking of investing in the asset class itself, and I appreciate that actual thorough answer there on kind of how they're thinking about the regulatory environment, because from our perspective here in New York, I mean, it's just guns blazing. It's just like, let's go. And I think that, clarity and the market structure bill will kind of mark a line in the sand for this ongoing crypto winter and just this state of limbo where we don't really know what these tokens are, what we're investing in. I think we'll get more like equity-like structures on the token side. We'll get better clarity on what assets, you can buy, what is a security, what do buybacks and revenues look like from token structure perspective. So there's a lot of these like things that are just kind of, we've been operating in a gray area, which I think is fine, but this line in the sand is coming. And after this, we're going to see a lot of more refined leaders in the market who are able to execute within this compliant way and do it far better than those who were kind of operating in a regulatory arbitrage-esque manner. And it's going to be a widespread impact across the industry. We'll see how that pans out. But I think a lot of the industry was built upon regulatory arbitrage. And so I'm a little bit frightened as to what's going to happen when we get actual clarity, because I think there's a lot of businesses that are going to be kind of like the emperor with no clothes on. I mean, what's your thoughts on the state of on-chain businesses? Obviously, Hyperliquids is kind of like the golden goose. We'll see how long that lasts. But kind of, what do you expect to change as the industry evolves post-clarity from the on-chain business and the structure of these crypto token entity DAO structures? Yesterday we saw Across put a proposal to move towards more of like a C Corp rather than a DAO structure. What do you anticipate to happen post-Clarity Act as we grow into more on-chain businesses that are operating in a compliant manner? Is it going to be, operate like this or get left behind, or is it going to be more of this gradual transition? How do you anticipate this kind of like evolution of the tokens, of the token market in the space?
So I would say from a investor point of view, it would feel like everything happened all at once, while it took a village and ages to get there, right? When you think about the first Bitcoin ETFs traded now in the US, 2024, it's been 10 years since the first filing of the Winklevoss brothers, but it feels like an overnight success, of course, given the scale of the Bitcoin ETFs, right? So when it comes to the on-chain businesses, eventually we're going to just call them businesses, right? Yeah. So the blockchain technology itself is going to be moved back to being invisible and away from the complexity that we have today, right? Whether it's bridging assets from Ethereum to Solana or any of the layer ones, it's incredibly complex. And I do believe that Polymarket, for example, is the best archetype, right? When you think about it, my own mother is actually using Polymarket to follow elections, to follow the state of the world process. So I do think that the fact that she doesn't know that it's a blockchain-based business, but she has the information and the data that she needs is exactly where we're headed. Then structurally, when it comes to the tokens, I do believe that nothing changes a blockchain-based startups to an AI-based startup or a robotics-based startups. Because at the end of the day, what matters is solving a world-changing problem that many people actually are facing, and your solution at a global scale is able to materially change people's lives. So the long story short is that these blockchain businesses will have to solve fundamentally something that people want, build something that people want. And that's why you're going to see then that the blockchain-based protocols that are able to have real revenue, cash flows, and fundamental user growth, not subsidized by airdrops, are going to be the ones incredibly successful. And it will come down to, of course, token economics being well designed and aligned with the community, aligned with also probably, to your point, sharing revenue, as well as we've seen with the proposal of Aave or even Uniswap. But I do think that when any investors are going to look at blockchain-based business, the fundamentals are going to be the same as any venture capitalist looking at an AI company, right? So this is what matters the most, to look at the addressable market, the margins, and whether this business can actually make a real revenue. In a world where the development of software has become so cheap thanks to AI and vibe coding, right? So I do think that even beyond crypto itself, AI and the enablement of building businesses overnight within hours, thanks to places like Cursor or Replit, where you can build a business from scratch, not even understanding, for example, Node.js or React, is fundamentally a different gameplay that we experienced before. But long story short, investors are still going to investigate and evaluate businesses the same way. And that's why businesses like Coinbase, Polymarket, and Kraken are incredibly successful today. And the VCs are actually fundamentally quite similar to the ones that are traditionally investing just in SaaS or AI or robotics.
Yeah, but that's the scary part. Is that there's been a narrative kind of hype investing practice ongoing, and we're shifting now to pure fundamentals. I call it the return to fundamentals.
Yep.
So, I mean, it is a culling of the fat, a trimming of the fat, a reorganization, and a consolidation. And so I think from the investor perspective, diversification as a strategy may come back, but I think it's a consolidation of the portfolio into majors and then cash flowing assets that have real business models on chain. And so getting to the majors, you guys just put out, or the 21Shares US X account just put out a post. I don't know who needs to hear this today, but the macro trend is officially healing. Global flows across ETPs and ETFs flipped positive for the first time last month since October 2025. So for the entire year of 2025, almost or at least from April onwards, we had billions of dollars of inflows, anywhere from $3.5 to $12 billion of inflows into these global ETFs and ETPs. November, we saw a $3.5 billion outflow. December, $200 million outflow. January, about $1 billion outflow. And then February, we saw a $500 million inflow. What's happening here? I thought institutions had this long-term time horizons. Why is there outflows? Did they buy the top? Are they rebuying more? Who's actually buying 21Shares ETPs? Who is the main drivers of the ETF complex at large? What's happening here?
So in the US specifically, the market is gated by financial advisors or RIAs, right? And then when you think about the breakdown of the investment cycle, you've got, of course, family offices and high net worth individuals investing through these financial advisors. And then on the other side, you've got prop funds and hedge funds that do bet on volatility and trade, of course, the basis trade. So the futures, the differential between the futures and the spot market specifically. And then on the laggard side, you have pension funds and insurance companies and university endowments. And you've seen the biggest news of the last quarter, which was the Harvard University endowment investing significantly in Bitcoin and then diversifying also with Ether as well, right? So I would say, long story short, you've got a multitude of investor types from like the university endowments to the insurance companies and pension funds, as well as, of course, hedge funds and family offices through RIAs. And this is basically the breakdown. But when it comes to the outflows, it's absolutely normal to see outflows, right? Like people have different time horizons. But on average, when you look at the flows of Bitcoin ETFs, Bitcoin has been down by more than 40% from the peak of October 2025. But when you have the aggregated outflows, it's just 5% down. And 5% down compared to 44% down shows, again, strength and a long-term view on this long-duration asset class, specifically for Bitcoin. And I do think that this is really the great news right now, that investors are buying into strength.
Yeah, I mean, right now we're actually seeing the market kind of hold up in the midst of this kind of broader bad news. Do you think that there's a dilution issue happening here with ETFs, ETPs, DATs? and other kind of like derivative-esque products that you can buy on like a typical Schwab account or through a broker versus just going on a exchange or on chain and buying ETH or buying Bitcoin. Like at the end of the day, all this capital kind of gets funneled into these assets themselves. But there's been this kind of like ongoing conversation on our show and on different podcasts that I've listened to about how, like, if we didn't have all these different ETH DATs and all these different, crypto DATs, we could maybe have more buy pressure directly on the asset, and that all these kind of like derivatives of the actual asset itself kind of are taking retail's attention and kind of spreading it out and diluting it. Is there any truth to that? Or how do you think about the kind of evolving ways to get exposure to the digital assets market?
So I think that's, first of all, to take a step back for your audience, that's all fundamentally different from exchange-traded funds or exchange-traded products. They are more of a levered bet on Bitcoin through equity rather than buying directly Bitcoin itself. So I would say it's more like a Bitcoin-backed levered bet rather than actually buying directly into Bitcoin through an exchange or buying, for example, a proxy of Bitcoin through an ETF that is 100% backed and follows the daily performance of Bitcoin like a Bitcoin ETF, right? So first of all, that's fundamentally different. And I do think that this is for a different type of investor. And that's why for us, yes, it's possible that if we didn't have that, we would have probably more buying pressure into these ETFs. But I do think that the fact that we have a variety of investment vehicles to have a direct or indirect exposure to Bitcoin is because there is a market demand for that, right? And certainly we've seen the rise of that. That explains and speaks volumes of that demand. So for us, we are targeting an investor base that wants to have direct exposure to Bitcoin, fully collateralized via, a beta strategy that we have. And then there are DATs that really provides a levered bet or a Bitcoin-backed levered bet, and that's totally fine. And this is what the market would want. But then in the long run for the DATs, I do believe that we're going to see consolidation into the larger ones because there are, of course, different ways to have exposure to Bitcoin. And of course, some of them didn't perform so well when you look at the MNAV.
Yeah. So then kind of like piggybacking on that, from your perspective at 21Shares, where are investors showing the strongest appetite today? Is it just Bitcoin? Is it ETH? Is it wanting to invest into certain platforms in like early stage? Is it any of these kind of IPOs? Like what is the demand appetite spectrum look like in the conversations with institutional capital? Like what does that actually look like today?
It's a phenomenal question, Andy. And what we've seen so far is that on average, we've seen, of course, more demand for Bitcoin in this heightened geopolitical conflict, especially over the last, I would say, couple of weeks and 3 weeks. Certainly the performance of Bitcoin over the last week is a testament to the pent-up demand for an emerging store of value that could be complementary to gold, as in Bitcoin. But when you think about the S-curve of the adoption of the asset class, there are investors that are very early or were very early in the asset class, and they are moving way beyond Bitcoin, Ethereum, and Solana. And some of them already bought into, for example, Hyperliquid through our product suites, while others are looking at also doubling down on Bitcoin, doubling down on Aave and others. So I would say it's a mix in the long tail, but I would say for the long tail, it's been more selective, as we mentioned previously. Investors are really paying attention to cash flows, to user growth, and the fundamental analysis and business models of these protocols. While right now, when it comes to Bitcoin, and as an asset class itself, many investors are looking at these opportunity costs compared with AI, robotics, and biotech, because of course, AI has actually performed really well. And Bitcoin was almost like on the back burner compared to gold and AI, and not the main character when you look at the kids that the investors can invest in and love. But I do think that the education, the demand for education for crypto assets, including Bitcoin and the long tail assets, is right now at an all-time high. The investors are asking a lot of information because they actually want to learn. They want to understand. They also had exposure in the past. And sometimes even for the older investors, they have younger generations as in their kids or grandkids that are super into this asset class and are demanding or asking more questions around it. So I do think that this is great for companies like 21Shares, and even for my role as head of research, to really provide as necessary as possible information for the investors to guide them through 0 to 1 or 1 to 10 or 10 to 100. For the 10 to 100, it's more of the long tail assets, but selective. And I would say Hyperliquid and Aave and Uniswap and some of the cash flow driven businesses had performed pretty well when it comes to the flows that we've seen.
Yeah. I'm curious if there's any demand for like kind of the L1 trade still. Like, are people looking at the kind of Metcalfe's law, network effects? Like, this is the underpinning of the ecosystem, or like what's the state of the blockchain trade or L1 trade within the lens of the institutional kind of landscape?
Yeah, it's a phenomenal question. I would say the L1 trade compared to 2021 on the scale is very different, right? It's much lower than what we've seen in 2021, and partly because in 2021 we had massive liquidity in the market because of the COVID-19 pandemic and the fiscal policy. But also at the same time, what we've seen is that there were a plethora of layer ones that came out at that time with massive airdrops, sometimes 9-10 figures airdrops to incentivize investors to get into the ecosystem. And right now, when investors are looking at the layer ones, they're really looking at the cash flows, and the users and the business models, and even like the dilution as well from the airdrops too, right? So they're looking at circulating supply compared to max supply. But to respond to your question, the L1 trade is still there because we've seen demand for products like, for example, Canton. We've seen also demand for products like Solana, as well as even Ethereum, especially because now Ethereum has more of a layer one focused roadmap rather than a layer two roadmap. So the L1 trade is still there, but again, investors are incredibly careful around token economics and the fundamentals.
Yeah. Ellie, man, thank you for spending some time with us today. Hope the ETF and ETP growth continues to run. And I'm sure you've been a lot busier than you've been in the past. I'm not sure how long you've been with 21Shares, but I imagine the last 6 to 12 months have been absolutely nuts. I mean, just 1 week here in New York, and you get off Twitter a bit and you get into person, you put the suit on and you talk to people and you're like, wow, okay, certainly is not a bear market in this kind of sphere and sector. So glad you're here, man. And thanks for joining us.
Thanks for having me, Andy. It's been a pleasure.
Yeah, cheers, man. We'll see you next time. Signing off. All right, buddy. All right, guys. Up next, we're going to do a little insight into the pulse of the markets. We're going to have our producer panel, local in-house, little Rollup TV intern joining in here. Looking forward to this. Ellie had a lot of things to say. I mean, whenever I talk to these folks that are like on the edge, on the institutional side, it's mostly interesting to like hear about what is happening from their perspective with the conversations. What are those conversations looking like? What are they talking about? What are these guys buying? A lot of them have to put up like public reports and kind of like here's what we did, here's what we're buying, here's what we're launching. But a lot of it, I think, is kind of what we could probably assume. Like majors, Bitcoin, like they stay very strong. L1s, non-cash flow generating tokens, not as much. And so, yeah, I mean, that's kind of the state of the institutional side. And then also obviously on the kind of like DAT, ETF, ETP side. So good segment, guys. We're gonna get a little pulse of the market here from Etan. He's calling in from the producer panel here in the nest. So why don't we bring him up and get a little sense of what's going on in the market. Etan, man.
Yo, feels good to be here. How you doing,
What's going
Andy?
on? First show, man.
first show. Feeling good, stoked to be here at the Tokenization Tower in the heart
Yes,
of
sir.
neo finance. So let's get it started. Already pump fun yesterday. We had Alfonso from CrossMint, and he was talking about agentic agents and what's
Yep.
going to go down with it. This morning, Pump Fun actually announced on-chain agents are taking over. So you're going to be able to make your own token for your agent on Pump Fun, meaning it could
Okay,
do
so launch an agent and then use Pump Fund to launch a token for the agent.
correct. And this isn't like you're going to be able to make the agent through Pump Fund. You're able to import it from OpenClaw, Claude, set up a token for it in Pump Fund. And if it's a revenue generating agent, you're going to be able to set up automated buybacks for these tokens for the purchases.
Oh wow. So like if you have an active OpenClaw, you can launch a token on it like what we saw kind of. Do you remember the 2024 November what is it, Zero Bro crazy pumps and that kind of
AI
era?
16, yeah. So
AI 16Z, bro.
funny enough, that was the second thing I was gonna bring up. 20 hours ago, our favorite law firm, Berwick Law, had mentioned that they are seeking to sue them. I don't know how they're gonna sue an AI agent or whoever, but they're gonna go after them because
Wait, what?
Yeah, Berwick Law, right? AI 16Z is down 99% from its peak, from 2 billion down all the way to 10 million, down 99.6%. So they're going to be actively pursuing that. I don't know how they're
Dude,
going
those
to be
guys are
pursuing
so
it.
funny. You see those videos that they do where it's like the guy with the bald head and he's like dancing, and then they're like in the office and like, we're suing Pump Fun. Here we go. Here we go. Dude, how do you sue an AI agent like AI 16Z? Because isn't that's that Shaw guy?
Right. I don't know if it's like the agent or it's the person who makes it. Like, I'm curious, like with Pump Fund, there's bound to be like hundreds, thousands of these tokens with like revenue generating agents. And it's going to be funny, like, God forbid, if there's any like liability inside the products, then like who's going to be liable? Is it Pump Fund? Is it the agent? So it's going to be interesting to see how this goal gets rolled out.
Man, Pump Fun agents and tokens now. They are so quick to be on everything, right? Like creator coins were hot. Now it's agentic finance. They have the creator launchpad, the fee split, all of that, right? Like what happened to creator coins? Like no one does those anymore. I don't know.
I think we'll see come back with it. I think that every single time they just tend to go towards zero. So it's not really a win-win for either the creator or the viewer. Because like if the token just goes to zero, then there's no really incentive for even people watching or the creator. I think it's just like a negative connotation. Just like at Gainsey, he had that fat finger and like it's been down ever since.
Dude, Gainsey streams, man, those are amazing. So
Yeah, they're
funny.
still amazing. He fat fingered it. Token went from like 7 million all the way down to like under 1,200,000. So like once it like rugs, like if you have a drawdown or like 90%, I've never seen where like a token like goes from 90, like such a high market cap, it draws down 99% and making a comeback. Just take a look from Bagworks, all these different creator coins. So hot. They're taking PJs to like fights, boxing events, and now like it's you don't even hear about them. So
Oh
I guess we'll
my
see.
goodness. Didn't you say something about Jim Cramer before we jumped on today? He said something about 2008 or something.
Right, I was mentioning that. Funny enough, he said he's not buying the 2007 hype, meaning that preceding the 2008 like financial crisis, mortgages crisis, the stock market had hit like its high of highs, and he's warning that like, okay, we're gonna go into 2026, 2027, and it's going to be the same thing. Lucky for us, anytime that you inverse trade whatever Kramer's saying, you tend to make money. So I see this as like a bullish signal.
Yeah. Okay. Well, thanks for the update. Pump Fun. I did see that on my timeline. I think I saw the Kramer thing. How's the markets looking? I think it's pretty green today. Hyperliquid's still looking good.
Hyperliquid's always going to look good. Crude oil is trading like it's a meme coin and just trading like however Trump's tweeting. He's like, all right, I think I just saw he deployed like 20,000 Marines to Iran. So so crude oil is reacting to that, where it's like oil is just having
Is
this
it ripping?
20%. I think it hit 100. I don't know if it
Jeez, man.
spiked down, but it was moving
It's
like a
not good
meme
for
coin.
gas prices.
Yeah.
Yeah. All right, Etan, we're going to wrap up here. It's a happy Friday at the Rollup TV. We have a full slate next week. Etan, we're going to be in DC. You'll be here ripping the producer panel live. And yeah, we have 2 days of policy conversations at the end of the week, or sorry, at the beginning of the week, Tuesday, Wednesday, Monday, we'll be live here from the Nest, and then back Thursday here in New York, Thursday, Friday. Guys, just going to close out the week here a bit and just kind of roll into closing remarks. This was the first week of the Nest of the show, and we really just pushed it. I mean, we had an accelerated timeline. We wanted to do things as fast as we could, but still do them right. And yeah, I mean, we really wanted to just get this out. I mean, I'm getting texts back from people about small things to change, add more sounds, the lighting here, this, that. I mean, we're operating on guest management, camera management, all of the sorts. And so this is the beginning of the eventual growth of this company to be really on the forefront of the live broadcast, kind of Bloomberg-esque young generation. And so, look, guys, we're going to keep getting better. We fixed the window panel. We got our new little guy holding the world, got our bonsai tree, got the AC in order. We're working on it, guys. Excited to keep this thing cranking. Have a great weekend. Stay safe out there. Stay off the leverage slider. And hope you guys enjoyed this week on Rollup TV live from Tokenization Tower. Once again, shout out to Plume. Shout out to Plume. Absolutely crushing it. And guys, we'll see you fresh and early Monday, 12:30 p.m. Eastern live, Monday to Friday. See you guys on Monday.